Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock and why investors should mark their calendar for August 2nd, which is when SoFi Technologies will be releasing their Q2 earnings report. Then we're going to talk about the latest news updates regarding Tesla's TSLA stock and how their Q2 report is impacting their overall TSLA stock price and how I think it's going to even push higher in the future. After that, we're going to talk about Arrival stock, which is a company that we haven't talked about in a while. However, I have done videos on this previously, and this is an electric vehicle company that manufactures delivery vehicles, and they're trying to land a contract with the USPS, and they already have an existing deal with UPS. So this is really good news, and that's why the stock price has recently surged by around 14%. And then lastly, we're going to be talking about another company that I did a short video on called Exela, and Exela Technologies is a company that is not one of my favorite stocks to own. However, we're going to be going over the latest stock news updates for this company and why 5 giant investors that you will be familiar with are investing into this particular company, which would include BlackRock and Vanguard. For more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. SoFi Technologies, if you didn't know, is a fintech company or a financial technology company that operates as a digital bank through their digital app, which gives their customers anything they could probably need in terms of financial services and or financial products. The good news about SoFi Technologies is that they have confirmed that they will be releasing their second quarter earnings results after market closes on August 2nd. And over the past month, the SoFi stock price has actually increased by around 20%, which is phenomenal news. Other news updates concerning SoFi Technologies is that at their annual shareholder meeting, shareholders gave the authority to their management to potentially initiate a reverse stock split over the next 12 months. And that stock split is going to be a reverse stock split in the ratios between 1:2 or 1:10. And I personally think it's going to either be a 1-for-5 stock split or a 1-for-10 stock split. And normally a reverse stock split is looked on very negatively by general investors. So I'm not really looking forward to it. However, this does not change the fundamentals of the overall company. More news on SoFi Technologies that we have previously talked about is SoFi Technologies' plan to resell around $1 billion worth of capital through either common stock, warrants, and stock options for a potential acquisition. That's what investors are speculating about. Even some professionals say that SoFi Technologies could be raising this money to potentially perform another acquisition. However, right now let's focus on their Q2 earnings projections to see if SoFi Technologies will be able to meet these particular financial metrics. Right now, analysts have a projection that SoFi Technologies revenues will come in at around $346.48 million for Q2, which is actually not that bad because it would represent a growth rate for their revenues of around 46%. And if we can get a CAGR of above 30% for a rapidly growing company, this means that they are a phenomenal growth stock in terms of the way that they are scaling their revenue. In terms of their earnings per share or EPS, that's supposed to come in at around a loss of 13 cents a share, which is also not that bad because this means that SoFi Technologies is slowly moving toward profitability, which is currently set to be achieved sometime at the end of 2024, which is really not that far away. We also have projections for Q3, and professionals currently forecast that the revenues will come in at around $390.34 million and an earnings per share of only a loss of 9 cents, which would equate to a year-over-year growth rate of 55%. So Q3 is set to be absolutely phenomenal. SoFi Technologies also has an approaching catalyst coming up at the end of August because that's when the student loan moratorium ends. And once the student loan freeze ends, where former students will start to actually accrue interest and have to start paying on their student loans, this is going to push volume to SoFi Technologies for these former students to refinance their loans. However, SoFi Technologies already said in a statement that they anticipate that the current Biden administration will end up extending the student loan moratorium past August 31st and into the year of 2023. But despite this slight setback, it's just pushing a catalyst more into the future, but eventually it will be obtained by SoFi Technologies, which could be reflected very positively in their overall SOFI stock price. SoFi SoFi is also doing a fantastic job in terms of their student loan refinancing, because their student loan origination volume actually was around $983.8 million during the first quarter, which would equate to around a 29.6% total origination volume, which is absolutely spectacular. And when the student loan moratorium eventually ends, we're anticipating an even larger growth rate, which should impact the stock price very positively. So overall, we have very good news for SoFi Technologies, but please mark your calendar for August 2nd regarding their upcoming quarter 2 earnings report. Next, Tesla released their quarter 2 earnings report here recently, and I think that the TSLA stock is absolutely primed to bounce even higher than it is right now. For Tesla's quarter 2 earnings, Wall Street expected the company to report a disappointing earnings report. However, regardless of what happened in quarter 2, I still think that the TSLA stock has a lot of upside left in it. The reason why Wall Street experts anticipated that the quarter 2 earnings report was not going to be as impressive as quarter 1 was due to production setbacks as well as supply chain constraints. And because of this, various analysts have actually cut their overall price targets for the TSLA stock. But investors, in my opinion, should not be worried about this, because the long-term business fundamentals for Tesla are still completely intact, and I think that the TSLA stock still has a lot to grow over the coming months. Now, due to the current stock market environment, investors should really brace themselves for what's inevitable, because this is going to negatively impact growth companies the higher the interest rates go. However, despite this, I think Tesla has shown a clear path toward continuously growing despite the share price falling as of the last couple of months. And the main reason for the share price to actually fall was due to early July, where Tesla paused production in both their Shanghai factory as well as their factory over in Berlin. And because clearly this was not good news, that caused the TSLA stock price to pull back very drastically. But I think investors should still be optimistic for what's ahead of Tesla as a company and their stock price. Many experts actually forecast a phenomenal path for an appreciating TSLA stock price, and according to Goldman Sachs, they say that we believe that the record production in June is a sign that Shanghai is ramping back up well, and that the company made progress recently at its Berlin and Austin factories, end quote. Wall Street actually has more reasons to expect Tesla to continuously scale their productions upward and thus increase their overall TSLA stock price, mainly due to their competitive advantage of their ability to manufacture electric vehicles much more efficiently than other companies thanks to their gigafactories. Moreover, the EV and electric vehicle demand is not falling, and it's actually increasing, which is extremely good for the TSLA stock, and that's why I think that the TSLA stock still has a fantastic upside and it could bounce even higher. The next company we're going to talk about is another electric vehicle company called Arrival, ticker symbol ARVL. And Arrival already has an existing deal with the United Parcel Service, or UPS. However, they are still technically in the running for a USPS contract, which is looking to electrify their fleet. And we've actually talked about parallels of this all the way back when we talked about Workhorse, which ended up not working out. However, because Arrival has a very proficient and efficient electric vehicle delivery vans, the USPS contract is currently acting as somewhat of a catalyst for the Arrival stock. But even though the contract winners have not been announced as of right now, why is the ARVL stock price increasing? Well, one reason, the demand for electric vehicles is increasing, so Arrival is still looking very good right now. Another catalyst is that the USPS, or the United States Postal Service, actually more than doubled their initial estimate regarding how many electric vehicle vans they will need. And because Arrival is focusing on manufacturing, this could be very positive for the Arrival stock and all other competitors for this particular contract. Now again, I'm just putting this company on your radar, and I am not technically advocating that they will win the USPS contract. That is going to be a video in and of itself if you want to hear more about it. But what I do like about Arrival is that while Arrival is scaling and manufacturing and building their company, it's actually planning to turn profitable while it's growing. Normally a growth stock will be highly unprofitable in its growth phase, and then once once the growth phase ends, then that's when the company starts to achieve profitability. However, Arrival is trying to do this simultaneously, and that's going to be very positive for their overall stock price. The last company that we're going to talk about is Exela Technologies, and why so many investors are piling into this company, even though technically I am not a fan of this company, but I'm still going to report on it because multiple people have asked me to. So Exela Technologies, ticker symbol XELA, has been the focus of many traders as of late due to them receiving an acquisition offer. If you didn't know, Exela Technologies specializes in transaction processing and other business solutions, and the reason why the XELA stock is up more than 60% right now over the last 5 days is due to this acquisition or potential acquisition. Exela was given an offer to buy an unspecified part of their business unit that generates around $200 million worth of revenue for them, and right now Exela is in discussions with several parties concerning this acquisition. Exela also initiated this plan in order to minimize their overall debt load, as well as lower interest expenses and maximize shareholder value. But for me personally, I will be staying out of this company because I do not bet on things such as this in this particular instance. Exela went on to say that its board will carefully review the offer to buy their unspecified business unit. However, they are trying to evaluate other strategic alternatives according to this article. Now, I also want to mention that Exela Technologies XELA stock is down more than 75% year to date, and it has lost 99% of its value over the last 5 years. And remember, when I first did a video on this company, the stock price still had plenty to fall, and I actually predicted that the company was going to absolutely crash, and that's exactly what it did. Now, I also want to point out lastly that during the first quarter, around 54 institutions and funds own XELA stock. However, if we compare that to the prior quarter, which had around 65 total funds holding the company, clearly they have decreased and lost around 11 funds. But despite this, we still have some major players for this company, such as B. Riley Financial, who owns 47.43 million shares. We have Hobbs, who owns 11.85 million shares. We have Vanguard, that owns 10.25 million shares, and BlackRock, who owns around 4.84 million shares. Now, I do want to mention that the majority of these companies have actually purchased more XELA shares as of the first quarter, which is very interesting, especially as the company still gets cheaper. But according to Vanguard and BlackRock, this makes up a very small, minute amount of their overall holdings, so this is not a reason in it of itself to go buy this company. This is a highly risky growth company that you should be very careful with, and I personally do not advocate to buy this company. But I would love to hear your thoughts down below. Remember to go and smash that like button for more videos like this one, subscribe if you are new, and I'll see you in the next YT video.